To the markets in the United States, right now, early on, looking at a positive situation across the board. The Dow Jones Industrial Average indicated to open up in the double digits, pointing to a higher opening for the broader averages in the U.S. on the heels of similar stories across Europe. Joining us now from Rosecliff Capital, the founder and CEO Mike Murphy in New York, along with Sandra and Dagen. Mike, we look back at various terrorist attacks, and you actually do not see a big market reaction to a situation like this. What would you expect this morning, Mike?
Yeah, Maria, there was a lot of talk over the weekend about coming in and buying the pullback on Monday morning. A lot of traders were on the internet talking about any pullbacks should be bought. In the past, that's been an opportunity to make money. And I think that's one of the reasons we saw some weakness in Europe this morning. But then as the day has progressed, we've seen futures come back to where we're now in the green. So the one thing I'm watching on this, though, is oil. Oil had a terrible week last week, and our markets have been very highly correlated to the oil market. And now we're seeing oil up about 1% this morning. I think that's something to really keep an eye on.
I think that's a great point, Mike, because you've got oil right now up better than 1%, but it has been selling off last 2 weeks. To what do you attribute that sell-off?
There's a lot of things out there. I think really you could just simplify it and say it's just too much oil on the market. There's a glut of oil and the expectation that global growth is slowing or has slowed. So I look, though, at this 40 level as a very key area. We broke it and then rallied hard from 39 to 50 over the summer. So I'm watching oil. I think if oil rebounds on the concern for increased fighting over in the Middle East, you're going to see the markets rally on that also.
There is a sentiment of resiliency here, and Dagen, I'm remembering the days after 9/11 when I was down there on the floor of the New York Stock Exchange. Once the markets did reopen on that Monday morning, there was a feeling of, okay, we are down, but we are not out. And there is a feeling of resiliency where you almost want to see a positive reaction from markets just on the solidarity symbolism.
Absolutely. According to Sam Stovall at Standard & Poor's, remember that day, the first day of trading after 9/11, the market was down the S&P was down nearly 5% or 4.9%. The total stock market loss was 11.6%, but the market bottomed 11 calendar days later and recouped all of its losses within just 31 days. So that's important to remember, comparing this to that horrific event here in the United States. And I wanted to add, there's been so much concern about the Federal Reserve tightening and raising interest rates that if the Fed needs another reason not to make that move, this could be it, and that could explain at least some of the resiliency you're seeing in the markets today.
I think that's such a good point. You're absolutely right. Sandra, in terms of sectors and industries you're looking at this morning, what's moving mostly? We know what's going on in terms of European indices, where you've got the hotel and sort of broader economic cyclical industries getting hit hard.
As we speak, I'm watching. We're talking about the fact that the CAC 40 in France is actually posting gains right now, but at the same time, within the CAC 40, you've got the airline sector getting hit really hard this morning, leading the way to the downside. You've got Air France, KLM losing more than 5%, British Airways, Ryanair, Lufthansa, all of them are down between 5 and 3%. So while the market might look flat, some of these sectors, Maria, are getting beat up pretty hard this morning. Anything travel related. And I was on the phone Friday night with the portfolio manager who said he was selling all the travel stocks, hitting bids across the board there. Obviously, there's just a lot of concern about what this is going to do to consumer confidence and with global travel.
Well, which leads me back to the Fed issue, which Dagen brings up. And you wonder if the thinking changes on the heels of something so extraordinary as this attack, Dagen, because after that jobs number in October, we were all pretty much expecting that the Fed is going to move in December. I wonder if that changes now post this situation.
Right. The biggest impact will clearly be on the individual and the confidence of consumers, not just here and in Europe, but around the globe. You saw those weak retail sales numbers here last week. That's your biggest area of worry. And the Fed has to be thinking about, are we going to do something else that would rattle consumers at this point? I think that this certainly must give them pause and make them rethink what's happening.